Hey, how are you guys? It's Dave with Moneyology, September 22nd, 2019, and this is the weekend market review. So I wanted to first start with going through the Google Sheets and want to go through and take a look at how the markets are doing from various different sectors. So starting with uh, best year-to-date performing charts: clean energy, semiconductors, home construction, aerospace, and defense. Look at these performance numbers. I mean, we're talking 44%, 45%. Some of these home builders, gasoline. It's interesting that gasoline is up here despite energy not doing so well. And scrolling down here, let's see. So a lot of green so far this year, and I'm curious to look at the areas that haven't done too well so far. So you see, uranium is still negative for the year. Lithium is still down for the year, in some countries as well. So obviously, at the bottom of this, you see the oil, gas, and equipment. You've got the energy, small caps. You've got the oil, gas, and producers. There's going to be there's a tremendous opportunity if you watch my video from the premium video from a couple of weeks ago, or rather last week. I think oil is just starting a new uptrend. And yes, there was a fundamental story that really allowed oil to take off, but it wasn't ready to rise so quickly. And obviously, there's a lot of supply in the market, so a lot of folks use this opportunity to sell their positions. But I think oil is an area we really want to look. India is starting to get interesting. They took care of some tax situation. So that's an area that we might want to take a look at. And ultimately, and also Nigeria. I mean, down close to 20% this year. If oil takes off, Nigeria is setting up for a very, very nice run, I think, over the next 12 to 24 months. So obviously, it's been hammered. 1 year, 10, 3 year, and 5 year, but there's a really good potential opportunity there in Nigeria. So, all right, so let's take a look at one more thing. So this, by the way, is from the Moneyology fundamental zone, and I notice most folks are not using this data, but it's very interesting. This is close to up to date data from the government, from the federal Fed of St. Louis, where we've posted a lot of this data on from the economy. So take a look at that if you haven't done so. I think it's a good resource, not available anywhere else on the web. Also here, it might take some time to load, but we've integrated the Google spreadsheet that you saw here into our website. And if you click at the bottom here, it's kind of hard to see, but you can click on ETF stock charts, and you can see these numbers. Just give it a little bit of time to load, and you can play around and get some more guidance onto the markets. But all right, so let's take a look at the weekend market. But from a daily perspective. We've been looking at it from a long-term perspective. As you know, I pointed out that it's well positioned to break out to new all-time highs very, very soon. But daily charts are suggesting that perhaps a pullback in the near term, maybe over the next 1 to 2 weeks, is becoming more and more likely. So let's go through it and see why I say what I say. So first, let's start with the 10-year Treasury. We pointed out that 195 would be an area of resistance, and sure enough, we tagged that area. I didn't expect it to be tagged so quickly. We pulled back some. So with some consolidation here, is very likely, and I think eventually a move towards 2.2, possibly a little bit higher, is where I think the 10-year Treasury is going to ultimately head to before this market run to the upside is over. Here's the Dow Jones Wilshire 2500, and notice we hit near, we almost hit the 52-week highs, but momentum couldn't quite get up there. And even though we did break the downtrend, I think that there's this 61 level of RSI is a strong point of resistance. Also, look, this is the key here. Notice where we broke down right over here. This is where momentum broke right around the 61 level. So this is going to serve as a very strong point of resistance, and we couldn't break through it this time around. So that's why we're pulling back. I think a move potentially a little slightly below the 50-day moving average is a possibility. So some downside ahead there. Dr. Copper made a very, very nice run from the lows, but ultimately couldn't break above the 200-day moving average, and it's pulled back, and pretty rapidly so. I think if you extend this trend line right here, I think we might still see some more downside to copper, perhaps all the way back to that 39 level on the JJC. But I think copper is starting to look interesting again. Gold, on the other hand, closed the week very, very nicely. It doesn't reflect here, but we closed the week at 1524. So that's right around here, and it's just internals look much, much better, and I think that they're ready to make a retest at least at the 1570 level. So I think that precious metals are going to have a great couple of weeks coming up. Junk bond ETF. This one is making new highs every single week. It's consolidating above the 61 level. That's very positive. But PPO is decelerating here. So, kind of a mixed bag there. And if that breaks below zero, then I think we might pull back a couple percentage points in the junk bonds. Here's a ratio of the high yield ETF versus the junk bond. And again, this ratio performing well suggests a healthy economy, and vice versa, suggesting the opposite. We broke out of the downtrend that we've been in since April, and unless this is a fake breakout, I think that the economy is very strong and is going to get stronger right now. Yeah, there are a lot of weak points, but when I say the economy is strong, I'm saying the overall markets are suggesting that there's more upside to the overall equity markets, and the downside is more or less been priced in. So let's see. I think that this particular breakout will backtest successfully and then ultimately bounce. If it breaks lower, it's a whole different narrative. But right now, there's a lot of support here with the 50 RSI and this downtrend line that it broke out of. Housing index. Housing closed the week really nicely above the 69 level, above its upper trend line, and housing is a very strong barometer for the economy, and that's doing really well. Crude oil. So here's that spike that happened after the news release last Saturday. We broke out, and now we're kind of back testing. So if this area holds, and I think it will, you've got the 200 as well as the 50 day moving average serving as support. I think eventually the 50 is going to cross above the 200, and this is ultimately going to move much higher. But it might take some time. But use this opportunity to look at and do your due diligence and research on best oil companies that are going to take advantage of this play. Nasdaq. So Nasdaq, interesting. Nasdaq could not break this downtrend here, and that sure enough, it's starting to look like it wants to pull back. I think a move towards that, I would say 8,000, just under that level, is a possibility. So expect some near term weakness. Here's another ratio chart: the 10-year to the 2-year. This is the yield curve, and the yield curve really started looking bullish again, and then we pulled back, and now we back tested. So, going to be curious to see what happens here. Does it continue back test, or is it going to continue to move higher? Right now, the 50 RSI is going to serve as resistance, so I'm watching this one closely. Okay, consumer discretionary versus the staples. So you see that pulled back, couldn't break the downtrend, couldn't break that 61 level, couldn't break the 200 day moving average on this ratio, and it broke below the 200 as well as the 50. So I expect to see some near term weakness here, perhaps a move further down towards that 1.97 on the ratio, and it'll be fine, I think. But from a daily, there's still some weakness here. Here's a 20-year treasury to the tips, and again, this is a deflationary or a risk off indicator, and we pulled back quite considerably, but we found support right here on the 38 level. Now we broke above the 50 level, and I think a move towards 61 over here, which is kind of where we broke down, is probably where we're going to head. So perhaps a little bit more upside to around this level before further weakness is found. Here's the VNQ, the real estate ETF. And this one is kind of reaching a double top in price, but momentum is not as strong right now. So again, this is another potential indicator that things might want to pull back here. Now, PPO is moving in the positive direction. So if we can break above 94 on the VNQ, that would obviously be a very bullish sign. Here are the regional banks, and we called this inverse head and shoulders in several weeks ago, and it's had a really nice move to the top of this uh, uh, trend line here, and we closed the week, not closed the week, but we hit above the 61 level with positive divergence, so lower highs but higher momentum. So yeah, we can pull back here, allow the 50-day moving average to cross the 200, but I think ultimately this when this 55 level is broken to the upside, that's going to be your clear sign indicator that the markets want to move to higher. Here's one. Russell 2000 also broke above this downtrend, and although we couldn't break this double top here, there's a lot of supply. Momentum was higher here than it was here. And that's a very positive sign. And you see again, the 50 is very close to crossing the 200. And I think that will serve as very strong support. Here's the small caps against the large caps. And this is very important. Look, we've been in a downtrend here all the way since 2019. That broke out earlier this month, and now we're just back testing that 50-day moving average level, back testing the 50 RSI level. And Friday was positive sign despite the weakness in the markets. You see that this particular sector was up 0.38, or this ratio. Here's S&P 500. And we couldn't break the 61 level, and it coincided with this break right here in the markets, and that's where we've found weakness so far. So again, pullback is possible next couple of weeks. And semiconductors had a double top, but with negative divergence. That's a sign that the market is weakening, at least in this particular sector. And I think we're going to see some further weakness over the next couple of days. Here's the SPY, different look at the same chart we just saw. This is the point that we broke down from right here, and that's where we're turning back again. So it needs to regroup, rebuild some momentum, and then test the waters again to the upside. Here's the same thing on the total stock market ETF, breakdown point, resistance, kind of similar theme. Okay, transportation. This is one of those areas that's been very positive. It broke above this downtrend with positive divergence here, where this high had a higher momentum high than the previous high right over here. So this could be construed as a fake breakout, but I think more likely than not, this 50 level is going to hold. There's support with the crossover that's about to come into play, 50 over the 200. And yeah, there's been pullback on PPO, but I think it's just going to round out and eventually move higher. Dollar index, I can't tell if you can make this into a bearish wedge or not, but ultimately the dollar did not break down yet of this downtrend, and it's consolidating here, and it looks like it wants to move higher. So we'll see. Perhaps this is just a back test and then break down lower. But the dollar's been very fascinating to watch, and on the weekly, it looks like it's breaking down. On the daily, it's sending mixed signals. Here's volatility. So volatility's had these bullish wedges, and appears to be in another one of those, and it's consolidating here above this trend line, above the 38 RSI. It looks like it wants to break above this trend line as well. So if that does occur, then I think you're going to see some more increased volatility in the markets, and perhaps a move higher. However, notice the 50-day is crossing over the 200 days, so perhaps all it gets to is here and then moves lower. So very curious to see how that plays out. Finally, Wilshire 5000. Actually, we might have one more. Wilshire 5000 also breaking down at the previous point of breakdown in momentum. So now it's pulling back and needs to regroup. Here's the world ex US, and you see that's doing quite well. I mean that is approaching its 52-week highs, and it's just there's really no weakness right now. And you see the 50 is about to cross over the 200, and that's another bullish sign. Last time it happened was around here, and the move was a really nice one from a low of 1867 to a high of 1946. Prior to that, I mean, I guess you can say it happened here, but there are a number of factors that suggested this move was not uh, not likely to be sustained, because we were not breaking above this downtrend here. Here we've already broken that downtrend. So combination of these factors, I think, I think the markets are set up in the next couple of weeks and months to really do well. But in the next couple of days, probably pull back into Monday, Tuesday, and perhaps over the next week or two. Anyway, that's it, guys. Let me know what you think. Stay tuned for our uranium review that this week will be available to the entire public. And I appreciate your support. Have a great week.